Frank, last December you published an op-ed in the Vancouver Sun arguing for further debasement in paper currencies and further appreciation in real assets such as gold, select real estate, and rare art. Have your feelings changed since then?
No, not at all. My views remain consistent. I don't think anything has changed that would change my views about what is happening in the world today, and what is going to be what are the consequences of what's happening today. So I think that certainly the behavior and the body language of all the policymakers suggests that they're going down that path. And so I'm going to play the inflation card. I think history's on my side on this one, and that's my view.
What do you think is really going on in America politically and economically, and what are you doing as an investor about it?
Well, I don't know, politically, I mean, don't get me started on politically. I think that the whole political structure's a broken down system in the United States. I think that it doesn't work. They have some very structural problems they need to fix. They have demographical problems and they have structural problems they need to fix. And I don't think that the political system is set up such that they can actually address it. They're on a 24/7 election campaign, and it seems most of the time. And to fix the sort of problems that need to be fixed for the long term, you need to make very fundamental structural changes that which would require telling the truth to the electorate, and that's not going to get you elected. So I think that the system is set up to fail the country, and I think as a result, they're going to take the easy path, which will be to pile on more debt and print more money. And that's certainly what they've been doing, and they are going to have to do a lot more of it.
Do you think the euro has a chance of surviving? What happens there next?
Well, I think that the euro over the long term will not survive. I think in the short term that the European Central Bank will relent, with Germany's approval. They will print more money than they already have. They have to print a lot more money. They've already done a form of quantitative easing in such that they lent the banks money at the very low rates, which in turn the banks used to support the sovereign debt. So I think that there will be a lot more need for a lot more of that in the next couple of years as all this debt comes that's maturing. There's several $1 trillion of debt maturing in the next few years, and where's that money going to come from? So I think that they will provide additional quantitative easing of sorts, of some kind. But I think in the long run, the European structure doesn't work at all. I mean, you've got a monetary union without a fiscal and political union, and you have cultures that are very diverse and attitudes and work ethics that are very different. And I don't know how you bring that all together under one roof such that you can marry both fiscal and monetary policy. So, and I think that, that flaw was always there, and now it's coming into view because, we've had a crisis, and that's the only time that, these things, all these cracks actually show is when you have a crisis.
Goes out.
Exactly. So I think that when this sort of thing happens, everybody looks inward. Politicians have to get elected at home. They have to cater to their electorate. So I don't think that you're going to be able to bring it all together such that it works. So I think eventually it will break up partially or completely break up. I just think that in the short term they will try as hard as possible to keep it together, and they'll have to print money to do it.
What do you think's worse? Is it the debt in the U.S.? Is it the debt in Japan, or is it the debt in Europe? Or do you think
it's all bad?
It's all bad.
It's all bad. I mean, I think that you've got a very interesting scenario right now, and the reason I'll give you the reasons why I'm playing the inflation card, because you have to look at it. What's going on here on a global level? Okay, you've got all of these countries, all the Western nations. You've got Japan, the UK, Europe, and America, heavily loaded with debt, some more than others as a percentage of GDP, but they're all heavily loaded with debt, and they're all printing money, okay? And so when you look at it logically, you look at it just and try and determine the simple math of what is going on here, is that money is cheap everywhere because it's being printed, okay? Rates have been forced down to zero, okay? Which in almost all of these places, including Japan, and Japan was the first. And if that allows the governments of these the treasuries of these nations to borrow at very cheap costs. So it promotes bad behavior. The U.S. is adding trillions of dollars to this deficit every year, to its debt load through these deficits, and they're able to do that because money is cheap. What happens when interest rates start to go up to normal levels? If that happened today in the UK and in Japan, they would have to default. I mean, it would take up if they were at normal levels, they would be paying 25% of their output, their GDP output, just to service their debt. And America is certainly headed in that direction. America is sitting on $16 trillion of federal debt right now, adding $1 trillion plus every year. And if you look forward, you're going to see that in 10 years' time, it's going to be close to $25 trillion. With normal interest rates, what's going to happen? How are you going to service that debt? You'd have to default. So what are they going to do instead? The Fed will become the buyer of last resort. Right now, the Fed is the biggest buyer of Treasury bills. And as the situation normalizes, as we get as all the money that's been flowing in to U.S. dollars as a safe haven start to find other places to go, rates are going to, and as America's balance sheet starts to get worse and worse, those lenders are going to require higher compensation. And the minute they start to require higher compensation through higher interest rates is when the Fed will really have to step in and to keep rates low such that America doesn't default and even the Fed with its own balance sheet doesn't become insolvent. They're going to have to print more money to keep rates low. They're going to have to become the buyer of last resort, the only buyer of those Treasury bills. So they've worked themselves into a very unescapable trap. It's like they're playing a game of chess and they're in check right now, okay? And they're headed towards checkmate. They're moving their king around the board, but it's headed towards checkmate. They might as well fold now, as far as I'm concerned, because it's considered bad etiquette in chess to continue to play when you're in a hopeless position. So I think that they've put themselves in a very, very unescapable trap. I don't think that there's a way out of this. The math simply doesn't work. So this is why I keep coming back to the inflation bet. And the world is in two camps today. You've got those that are betting on deflation and those that are betting on inflation. Okay, and I'm betting on inflation. And you can tell that there's a large part of the world's betting on deflation because everybody's in cash. There's a lot of cash, and people are afraid of deflation or an additional crisis that will cause even a depression. So they're in cash. And then there's the other camp that's in things like gold and hard assets. And they're betting on inflation. And I just look at it from a historical perspective and see what is the behavior of the policymakers and what makes them behave to act in a certain way. So you watch their body language, their behavior to date, and everything that I'm watching tells me that they're going down the inflation path. There are a couple of other things that if you see it on a macro scale, what's going on with people's attitudes, what's happening in the public discourse when people start to discuss the political economy, the media, policymakers, they allow certain words into the vocabulary which change the dynamics of what is acceptable, okay? And if you look at simple things like the word trillions, okay? Trillions of dollars, A decade ago, that was the sole domain, trillions was the sole domain of astronomy and quantum physics. And now we bandy it around like baseball scores, okay? And has anybody seen $1 trillion? You have any idea what $1 trillion looks like? You can't even fathom what $1 trillion. And yet now, because it's become accepted, we add that, it's become a normal part of the vocabulary and when everybody's debating this topic of where the world's going. And we add $1 trillion plus every year to the debt load in the United States. It's insanity, but we're numb to it, okay? The other one is quantitative easing, okay? It sounds very calming and sophisticated. Quantitative, it's money printing, okay? And the reason they don't call it money printing is because it's less alarming to say quantitative easing, okay? And so now it's, when policymakers or the media talk about quantitative easing, it sounds very like a normal thing to do. It's like something that we're going to expect to see happen because it's okay. It has an elegant sound to it. Too big to fail. Since when? Since when is it too big to fail? You know, countries and banks have failed throughout history. Now, there's a category called too big to fail, which has been accepted, and it means that you're giving license to those that run the too big to fail institutions to misbehave very badly. And you're basically giving them a license to pillage billions of dollars, and when they fail and take the entire system with them, almost take the entire system with them, they can plead ignorance or incompetence, which you can't go to jail for. You can only get fired. And that's what's happened. And so you're encouraging, it's that moral hazard argument, you're encouraging bad behavior. So I think with all of these terms coming into the vocabulary, you're climatizing the population for this change that's about to take place, allowing for things like adding on debt or printing money, and without a lot of public objection to it. The other part of it that I find interesting is that it's easier to make money with inflation than with deflation. All you need to make money with inflation is money, access to money, or assets, resources. So those that influence policy are usually the ones that have access to the money or can borrow it very cheaply.
So they have a conflict of interest.
So they have a conflict of interest. They are influence policy using the media, using lobbying, whatever they're doing to push in that direction, because it's much easier to get really rich with inflation as long as you have the resources to do it. You can borrow all you want in the US today at 2%, okay, as long as you don't need it. If you need it, you can't get it. But if you don't need it, if you're really wealthy, they will throw money at you at 2%. You can take that 2% money and buy assets that are going up with inflation, and the inflation is happening because money's so cheap. So it becomes a self-fulfilling way to get rich. And so I look at all of this behavior taking place right now, and these attitudes and the direction, the patterns, and that's why I play the inflation card, because it's the path of least resistance, where a lot of people are getting rich and where the public is being educated, quote, quote, educated to accept that type of behavior.
So how would you propose fixing the political situation?
Well, I don't think I think this is, it's too big an influence. It's too big an influence to try and change. So all I'm suggesting, as I said the article last December in the Vancouver Sun, is you're not going to change it, okay? So you might as well go for the ride, or at least not get destroyed along the way. And in the long term, those that will get destroyed are those with savings. If you have savings, if your money's in paper, you're going to get destroyed. Inflation's going to destroy you, and by then, all the really wealthy, influential types will have made a lot of money and diversified, and made a lot of money off the inflation card. So I don't think you can change it. I think the type of courage that it's going to take to change the political system just doesn't exist today. And I think you're going to have to see a lot more pain. If history proves correct, you're going to have to see a lot more pain before people force that kind of change. I mean, really force that kind of change.
Do you own any blue chip stocks?
Yes, I do. Ones that are international, diversified, and pay great dividends. Because everybody's looking for yield today, so you have to pick the ones that have a good yield and are large and global.
Well, most of those would probably be priced to perfection by this point, I think.
Yeah, so you're buying them for their yield, and you're buying, if you believe in inflation, inflation takes stock markets up too. Not as much as gold and other things, but stock markets will go up with inflation. The only things that go down are cash and bonds and fixed income securities. So stock markets do benefit from inflation.
So in the 80s, I guess, or in the early 80s or the late 70s, when gold had its run, and then obviously Volcker stepped in and raised rates dramatically overnight. Gold crashed, and equities went on the biggest tear of certainly of your generation. Do you think there'll be a return of the new dawn of blue chip equities and a return to the stock market? Because obviously the public sentiment towards stocks has never been worse in my lifetime.
Yeah, I don't think in this cycle. I think eventually everything comes back. I think that right now, I don't see it in the cards right now, and I just don't see a Volcker type coming in anytime soon. That type of independence with the Fed went out with 9/11. Okay, and the Fed has been hardly independent ever since. They work very closely with government and Wall Street to, get a desired outcome.
Mm-hmm. Let's talk about some of the parallels to history, because you've mentioned it twice now. Rome, obvious example.
Yeah, Rome's the one that everybody uses, and it seems to me too easy an example. I think a better and more recent example is 16th century Spain. In the period of just a little bit over 100 years, it went from an almost nothing nation to a great empire and back to a nothing nation in like maybe 150 years. Okay, and what happened, as we all know through history, is that they were the ones that initially conquered Mexico, Central and South America. They pillaged, they conquered both the Aztecs and the Incas, and they pillaged all their gold and silver. So you had tremendous inflows of gold and silver through the first 100 years of the 16th century. And what that did was promote two things. It promoted a consumption economy. They became importers of goods, opulent goods from all over, from the rest of the world. And it also it disincentivized the building of production. So they didn't produce as a nation, they just consumed. So they became a consumption economy, much like America has become over the last 50 years. So they had a deficit in their current account. So all the gold flowed out of the country. Then they waged a number of wars with almost everybody on the planet at the time because they felt they were a superior nation. Charles V, who became the Holy Roman Emperor through bribery and threats, decided that he wanted to wage war against Europe, and that continued with his son Philip II. And so they waged some very costly wars. They ran up, then they had to start borrowing money. All their gold and silver flowed out of the country to consume. They had to borrow heavily to wage these wars. So by the time Philip II came to power, in his lifetime alone, they declared default 4 times in a period of 40 years. And then another 6 times over the next 50 years. And that's what's happening in America today. I think that it became a consumption economy. It imported more than it exported. It ran up huge debts. And it's now going to have to pay the price. And there's no way out except currency debasement. And that's the only, otherwise you would have to declare default. And I don't think America's going to default on its debt. They would rather inflate it away. That's what they're going to do. It's much easier. And with the type of numbers that we're talking about, there's no other choice. That money doesn't exist anywhere in the world. The trillions and trillions of dollars, that's illusion. It doesn't exist.
Conservatives in the U.S., there's been some rumblings recently. Should the U.S., should the world for that matter, return to a gold standard, do you think?
I don't. I think we're way beyond that. I think it's almost impossible to peg to a gold standard. There's not enough gold in the world, and you'd have to price some ludicrous price and that's just not going to happen. And besides, I don't think that the powers that be will restrict themselves to the type of behavior that they would have to, the way they would have to conduct themselves if they were under a gold standard. They'd have to, they couldn't wage wars, they couldn't run up deficits. It wouldn't be fun to be a politician anymore. So, I just don't think it's going to happen. I think what will happen eventually is that the US dollar will get replaced with some basket of either currencies or commodities or a combination of both. Something will happen to replace the US dollar. It has to, but I don't think it'll be gold on its own. No.
So you're one of the most well-known gold bugs, certainly in the mining community. Would you ever sell your gold? And if so, when?
Absolutely. I think, I don't think the term gold bug has a certain, perception attached to it. I look at gold like any other asset. There's a reason I'm buying gold, and the gold happens to be the single biggest asset in my portfolio, is because I believe it's going a lot higher. But there will be a time to sell it, and I suspect that time. I can't tell you what that price is going to be. I've never predicted the price. I've always suggested that gold's going a lot higher, and I will know when it's time to sell by the way it's behaving at the time and what's going on at the time when I'm selling. And I think what's going to happen is it'll be at some level, and who knows what that level will be, and it's going to have a parabolic spike caused by some event or some loss of confidence, major loss of confidence, like say US dollar crisis would be a perfect example. And that will cause gold to just go through the roof, and then everybody will want to own it. Everybody. And that's when you want to sell it. And I don't think we're even close to that yet. It's going to happen though, and I will sell my gold. And I'll use that money to buy other hard asset categories, but gold will probably have a much greater run than some of the other hard assets because it's also a currency.
You've had some pretty impeccable timing in your career, exiting the resource business just months before the BRICS collapse and returning at precisely the right time with the company known now as Goldcorp. Some have read your recent return to the entertainment business as a statement to the health of the resource sector. Could you comment on that? Is that a correct assumption?
No, I don't read too much into that. I would have done that regardless of the state of the market, whether we were in a bull market or a bear market in the resource stocks. I've always had an attachment to the film and entertainment business. With Lionsgate and now Thunderbird. I'm very interested in the sector. I think that we can make money out of it, and that's just an investment for me. I hardly spend a lot of time running that business. It's run by professionals that have been in that company for a long time. So I'm a very large investor in it, and I'm helping them grow their business. But I also have a portfolio of many different types of companies in many industries, and that in no way reflects on how I feel about what's going on in the resource market. Having said that, the resource market is in the worst state I've ever seen it in the 34 years that I've been trading stocks, and I think that I think it might stay bad for a little while longer, but I think it will turn around. And I think what people might be losing sight of is that people usually connect irrational and stupid market behavior with peaks of markets, but it takes place at the bottom of markets too, and it's just as bad. And when you think about it, fear is a much greater, stronger emotion than greed. Okay, and so the sense of hopelessness that people might have about the resource sector right now is something that if you're logical about it, it will change. It's not going to stay like this forever. And so I think that you have to sometimes, if you lose complete faith, you have to give your head a shake and just realize that this is really, really bad. But guess what? It will change. And the other thing you have to understand is there's a lot of cash out there in the world. It's a lot of cash sitting on the sidelines, trillions of dollars of cash. And eventually it has to go somewhere, and it will go somewhere. It can't stay in cash forever.
So you built your wealth in the resource sector, particularly the junior resource sector. I'm curious, what's your outlook for the juniors? I know you're not a short-term guy, but tell me, short, medium, long-term, what is your outlook for our sector?
I think just further to what I was just saying, I think that in the junior sector is as bad as I've ever seen it. So you've got share prices trading at levels I would have never imagined. These are companies with real assets. I'm not talking just about exploration stocks. I'm talking about companies with either world-class assets or developing world-class assets that are trading at pennies on the dollar in terms of valuation. And so what I've done is, over the last 18 months, is taken a very significant chunk of my wealth and chosen a whole stable of these companies that I feel meet my criteria. My criteria is great assets, great management, grossly undervalued, and most importantly, that in my view are able to weather this storm, however long it may take, without massive dilution, without having to go to the equity markets to raise money when their shares are trading at pennies on the dollar. And so I've done my homework, and I've chosen my companies, and I've invested significant amount in a whole number of these companies. And I'm sure there are a lot more like these out there that I haven't even bothered to look at. But I think if I were an investor out there, I would really start to think about the fact that this will change, and look at value, and buy it, and pick right, sit tight. and you will make a lot of money eventually, but you might have to have a lot of patience. You might have to sit on it for a year or 2 or 3, I don't know. But one of these days, all of that cash is going to start to move into things, and things include stocks, including resource stocks. So that's my view on it. I think there's some tremendous opportunities.
Excellent. So there's a lot of bearish sentiment towards China and towards commodity prices right now, and commodities prices seem historically relatively high. What's your outlook on China? What's your outlook on commodities prices?
Well, China, yeah, there's a slowdown taking place in China. China is an exporting country, the largest exporter in the world. And, when the world slows down, as it has with America and with what's going on in Europe, obviously their export's going to slow. But keep in mind, China's sitting on $3.2 trillion of foreign exchange reserves. It's got a lot of ammunition to fuel some kind of domestic economy, whether it's through infrastructure or other stimulus that they can do internally, and they can do that for a long, long time. So I don't think that the pressure, the buy-side pressure is going to come off of the commodity prices. I think that's why you haven't seen commodity prices come down as hard as, say, the resource stocks that represent them. Commodity prices aren't going to go much lower. I think the commodity prices are going to probably go a lot higher in due course as a function of the population growing, as a function of monetary inflation, and which is the other part of my theory. So I don't think China's going to fall off a cliff anytime soon.
It seems like over the last decade there haven't been the significant discoveries, mineral discoveries, that there were in decades previous, and yet there was a lot of funny money floating around in the sector over the last 10 years. Now, although the prices are high, although it seems like there's demand out there for these commodities, the explorers, the early stage guys, are unable to find financing in today's market. You've got a lot of experience in this sector. When do you see that changing? When in the past has it changed, and what's your stance on that?
Well, right now, here's the problem right now, and you're absolutely right. There's zero appetite for risk in the marketplace right now, in the capital markets. Zero appetite. So what's an exploration stock? It's pure risk. Mm-hmm. So that's why there's just a complete inability to raise capital right now. When will that change? I think what you have to see happen first is some resolution to the European crisis. And I'm not talking about a fix. I'm talking about a muddle-through resolution that's going to give the markets enough confidence that Europe isn't going to fall off the cliff tomorrow and cause a global, crisis and a depression. Okay, and that's the type of fear that has to subside first. And when that happens, I think it will happen. And as I mentioned earlier, I think it'll happen through some form of money printing by the European Central Bank in some fashion, okay, whether directly or indirectly. And when that happens and the markets are convinced that we're not going to fall off the cliff tomorrow, then that's when I think you'll start to see some of the appetite for risk come back in. But for the exploration stocks, it's going to be probably a longer haul than, say, the companies that are developing assets, already proven assets. The appetite for risk comes in incrementally. It doesn't all come in at once. So I think that it's going to be tough on the junior explorers for a while. But at the end of the day, you need exploration. Okay, the world population is growing. The demand for metals is not going to go away. And so if the majors aren't doing it, someone's got to do it. And it's traditionally been the juniors that have led the way in exploration. And so you will have to have it. And like I said, commodity prices aren't going down. So there will be an incentive to explore again when the fear goes away.
And that's obviously done through Canada's venture markets.
We're the best.
We're the best. So,
Yeah.
so do you think the world should pay more attention to the TSX Venture? Should international investors care more about junior explorer stocks?
Absolutely. If I were an international investor, I would really start, now that the fear is at its absolute worst in terms of this sector, when no one wants it, that's when I think people should start looking at it and start making some very well researched and educated bets. Okay, yeah. And I think, yeah, absolutely. Whether they're doing it or not, I can't tell you. But if I were them, I would be.
So you mentioned that you've been buying resource stocks for the past 18 months, and it seemed like 18 months I'm doing some calculations in my head. That's like the PDAC 2011, the biggest ever mining conference, and some say a metaphor for frothiness in the market. You've obviously been a bit early.
Sure, it was very early.
Yeah.
I thought I was being absolutely brilliant buying some of these stocks a year, 18 months ago, thinking, wow, this is an incredible opportunity.
Because they had started to come off at that point?
They had come off quite substantially at that point. I'll tell you, what's happened since the end of last year and now, a lot of these things, and again, I'm not going to mention which companies, but companies that I bought into late last year thinking that I was brilliant have gone down 50% in value. So I've had to take a deep breath and say, okay, do I still believe in the asset? Do I believe that I'm doing the right thing? Is my theory still intact? And then you just buy more.
Sit tight and be right, and average down.
Either average down or sit tight, at least sit tight. And if you've got lots of ammunition and cash, sure, buy more. There's always, if you thought you were right then and your theories haven't changed, there's no reason to not buy more if it's gone down in value.
Frank, if you were a young man today, knowing what you know now, what kind of career would you go into, and where would you go? Would it be London and mining as it was for you 30 years ago?
I'm always loath to give advice to young people as to what they should do. Honestly, the last thing a young person should do is take advice from an older guy. We're kind of set in our ways. Our creativity shrinks. I think when you're young and you don't have a history of success or failure, anything is possible. As we get older, we tend to become a little bit more dogmatic in our views. Had someone told me what to do, 30 years ago, I probably wouldn't have listened to them anyways. I would have done what I thought was right. I think the world will always have opportunities, and whether it's in resources or technology or anything else. I happen to like the world of food. I think that food and food production is something that if I were a much younger man, and I would take a lot of time to learn what's going on in the food world. I think there's going to be an incredible opportunity because the population's growing. The amount of arable land is a lot less than you would think. We have water problems. We have land issues. That's been degraded. We've got rising costs of inputs, and I think that innovative farming and land ownership in the farming world is a very interesting place to be.
So you're putting some of your own capital then into farms and
a lot. Yeah, I've invested a lot in farms. I think you get two kicks of the can with an investment farm as long as it's managed properly. Okay, a lot of people buy farms and think that a farm will take care of itself. It doesn't. It has to be managed and managed intelligently. But with investing in farm land, it has proven to be a very successful investment choice in periods of inflation. So if I believe in inflation, I will definitely invest in farmland because that land value will go up in price. Additionally, you've got the fact that you've got this global food situation, which I don't think is going to make food any cheaper in the long term for all the reasons I just said. So you can also generate a nice yield if it's run properly. So yeah, I've been investing a lot in farms all over the place.
Now, how long term is it?
Very long term.
Very long term.
It's not like trading a stock.
So if someone came in and offered you twice what you paid for some of your farms, did you turn them down?
Probably. It's with some of them, yes. Some, yeah. Anybody offers you twice as much as you paid on anything, you have to think about it. But no, I've made a long-term bet with this farm investment. I think that this is something that's going to continue to, and especially as inflation starts to kick in. I mean, we haven't seen inflation yet. We've seen asset bubbles, but we haven't seen inflation yet. When we see inflation, you will want to own a lot of gold. You'll want to own a lot of farmland. You'll want to own a lot of rare art if you can afford it.
What about if you can't?
If you can't, I think you got to stick with gold. I think for most investors, someone's got $200,000-$300,000 to invest. Gold coins, gold bullion is probably the best route to go. I mean, you have to be realistic about how you can invest your money.
Can we talk a bit about education, starting with your own and your views on whether a formal education is as important as experience, and do you want your own children to have a formal education, and how How have you educated yourself?
Yeah, I don't have a formal education. I've got a college diploma in finance. I was drafted into Merrill Lynch when I was like 19 or 20 years old. I didn't really want, I could have gone and gone further with schooling, but it was much more interesting to be in the market for me. I don't think, certainly having a university degree will open doors for you. There's no doubt about that. But it doesn't make you any smarter than someone without it if that other person is entrepreneurial, has a great personality, a sense of humor, and is ambitious. That's worth more than 10 PhDs. And so I think that, look at guys like Gates and Steve Jobs, and I can name many, many others, very successful people throughout history, that a university degree doesn't really guarantee you anything.
So how do you educate yourself?
Read.
And you read still, constantly?
Oh, yeah, especially history books. Everything you need to know about the future is there in black and white in a history book. I absolutely believe that.
Frank, what do you think is the secret of success in creating wealth for oneself?
I think focus and belief. I think you have to first believe that you're going to be successful. When I was 19, I read a book called Think and Grow Rich by Napoleon Hill. I know a lot of people have read it, but I was 19 years old at the time, and it really changed my life. And I actually believed what I read in that book, which was simply that if you believe in something completely and wholly and completely, and you focus your entire attention on that goal, you will pull it off. And I actually believe that. I think if you have a goal in life, you want to achieve something, if you believe in it strongly enough and believe in yourself, and you remove all negativity from your environment, you just focus on that thing, it will happen.
You start to eliminate the barriers.
Yeah.
I remember you said believe, I think 5 times in the last question I asked you. I think he put the word believe in caps lock in that book.
Exactly.
And for a reason.
But you have to believe. You can't fool yourself and say, well, yeah, I want that, I want that, I want that. You have to actually really believe that you can have it. And there's a big difference.
So how you said you were 19 when you read that book?
Yeah.
How quickly was it for you before you had some success, before you had maybe first luck or first score?
Yeah, I was pretty lucky. It happened early on for me. I was, I think, 21 or 22. 22, I think.
What was the ingredients of that moment? Like, how did it happen?
I don't know, serendipity. I don't know. It just happened. It just it's our business. It was the mining world. It was a drill hole.
Wow.
It was a drill hole. It's as simple as that. I happened to own a lot of shares in something that became a gold mine from nothing. It was called Breakwater Resources in 1982, I think it was.
So you're 21 years old, got some cash in your jeans. Mm-hmm. Obviously, that changed your life.
Mm-hmm. It allowed me to buy ownership, a significant ownership in a brokerage firm called Yorkton Securities, which I was a junior partner in. And that then became my vehicle. I built Yorkton over the next 16 years, eventually ran it, chairman and CEO of it, and made it an institutional boutique that focused on the mining sector.
You mentioned Think and Grow Rich, but I also know that you are a fan of the book called The 4 Agreements. Can we talk a little bit about what those 4 agreements are and what it's meant to your life?
Yeah, it's funny. Have you read it?
I have.
Okay. Well, there are 4 agreements.
Actually, that's not true. I read the Cole's notes preparing for this interview, but I promise you I'll read it.
You should read it. And really, it changed my life. One of the agreements, which was don't take anything personally. There are 4 agreements, as the book suggests. Don't take anything personally. Be impeccable with your word. Do your best. And don't make assumptions. Those are the 4. I absolutely focused on one, do the other 2 very well, and do one very badly. But the one that I really took to heart was don't take anything personally. What other people will say about you that you may hear about has nothing to do with you. It's their own insecurity, their own emotional state. And a lot of us hear maybe bad things about being said about us or something that hurts us, and we take it on, and what you should do is completely disregard it because it has nothing to do with you. And all it ends up doing is occupying your mind space. And when you occupy your mind space with negative thoughts of anger or hurt, you can't focus on the more positive things in life. And so the minute that I accepted that I took that on, it was very freeing. You know, it allowed me to just completely disregard what people were. If someone had said something, I would just put it out of I would forgive them in my mind right away, and just completely forget about it and continue on. And it's a very freeing way to live.
Who introduced you to that book?
That was President Clinton, actually, who told me to read it, and it was very helpful.
So could you tell me a little bit about Frank Giustra before and after meeting President Clinton? Like before, your life was obviously devoted for the pursuit of wealth for yourself and for others, and after it seems to be about giving it away. What's the difference?
Well, that is the difference, and you know, and I think that the biggest change in my life since meeting him was that I decided to dedicate more of my time to philanthropy and less to business. And I still love business, trust me. I love the business world. I love making money. No, but also I love growing things, you know, watching things blossom, you know, just love learning. And whenever you get into something new, you have to learn that business. You have to educate yourself. You know, I'm going through the food education business right now for the last couple of years, and it's fun because I'm learning. But that's less of my time than my major philanthropic endeavors, you know, whether it's CGSGI or the International Crisis Group or Street to Home here in Vancouver, and other ancillary smaller projects. It's that's the biggest change. That's the biggest influence he had on me, and that was really having spent a lot of time with him. He just inspired me. He's just an amazing human being.
That's cool. So of all the philanthropic work you do all around the world, which has the most significance, the most meaning to you?
Well, you know, they're all meaningful. I wouldn't be doing them. I'm passionate about each one of them. Otherwise, I wouldn't have taken them on, especially at the scale that I'm involved with some of these projects. But I'll tell you this, the one thing that's the most satisfying is the one that's cost me the least in terms of cash, and that's mentoring kids. And I've been doing this for a lot of years, and it's phenomenal. You know, every kid needs guidance, especially young boys need guidance from an adult that they respect. And a lot of kids in our society don't have that at home. For a number of reasons, they don't have access to that kind of guidance, broken homes, you know, all sorts of other issues. And those kids are left to flounder, and a lot of them end up getting themselves into a lot of trouble. And gangs and drugs and dropping out of school and all sorts of things. And so I've spent a lot of time over the last 15 years mentoring kids, either one-on-one or within groups. And when you do it long enough, the satisfaction comes from watching what happens to those kids as they grow up, that you've actually had some influence on them and they've managed to find success and find the confidence to break out of whatever mold they were in. I had a young guy come see me last month. He's 27 years old. And he came in to remind me that we'd known each other 10 years. I'd been mentoring him for 10 years. Came in when he was 17. And he was a very troubled young man, gang kid, got stabbed, all sorts of stuff happened to him. But you could tell there was something about him that he wanted to succeed. And boy, has he ever. Amazing what this young man has done. And he's brilliant, and I think he's got a huge future ahead of him. And he came in to thank me to say, you know, it obviously, and you know, when that sort of thing happens, that's better than writing any check of any size to any organization. It's because you see the change in a human being. And so yeah, mentoring.
Time may be more valuable than cash.